Where are you really positioning the dollar in the next year or so, given that, of course, in your notes, you're also thinking that perhaps we are going to see a sharp rally coming when it comes to the equity space? How do those two really factor in?
I'm not sure they do, actually. The equity rally, I'm simply thinking that the S&P's down, 6 days in a row, and it's about time that it did bounce. And so it's just purely a technical observation. But the dollar, I think, should, on a 12-month basis, be at least flat or lower than where it is now, because we do think that the inflation in the U.S. is going to start to slow down. As we move into the summer months, the base effect will naturally do a lot of the work. But there's obvious signs of demand destruction, too. So our own assumption for the terminal rate of the Fed funds rate is about 2.5, 2.7, which is well below where the futures market is pricing it at about 3.5 and above. And I think as that realization sort of sinks through, that the Fed won't have to raise as much as the market currently expects, then the dollar can soften. As I say, I don't think it's going to happen tomorrow, but on a 12-month basis, yes.
How does the strength of the U.S. dollar affect markets across Asia? Do capital flows play into where we're headed in terms of asset allocations?
Well, in most Asian markets, foreigners don't really determine the direction of the market anymore. They certainly did, 30 years ago, and but the local retail investors, the local domestic investors, they're really the price makers now. Having said that, for the world outside of the United States, when the dollar goes up, things become more expensive for us because, as you well know, the vast majority of things are priced in dollars. So when the dollar goes up, they become more expensive for us, whether we're buying in Australian dollars or Singapore dollars or whatever it may be, to buy those things. And that's not good.
Mark, you've sort of been looking back into treasuries, as have some bond bulls overnight as well. Which end do you prefer? And I guess how is that informed by how you feel about whether the Fed might front load and where the equity sell-off goes from here?
I wish I could be precise, but I can't, so I better not answer that question directly. But I would say that we feel the 10-year Treasury was capped out at, what did it get to, 3.2 or something like that on Monday? I can't quite recall. We think it's capping out here, and so we have been buying some Treasuries. But I can't really give you the specifics. I apologize.
Emerging markets, and perhaps you can give us some views as to where the opportunities are across EM. Is there a sense that we're kind of throwing out the baby with the bathwater? And would you even be venturing to China at the moment, or would you really need to see a better policy and a shift when it comes to COVID zero?
Well, I'm so happy because I started my career in Southeast Asia 30 years ago, and for the last 15 years, nobody's wanted to touch it with a 10-foot pole. And I really think this is, we're going into a golden era for Southeast Asia. It's going to be great. Number one, because you just couldn't have a conversation about Singapore or Indonesia or Thailand or Vietnam for the last 10 years. Nobody wanted to listen to it. Everybody wanted to know about Chinese technology companies. Now China is essentially off of global investors' radar, and it's a huge vacuum that needs to be filled. A $10 trillion vacuum needs to be filled. And these markets, of course, are just a fraction that size. But I notice a lot of interest in them because of that, because China is not a destination that foreign money will allocate to. I think, I can't even tell you when it might start to go back. And there are good stories here. These are commodity-rich economies. There's 600 million people in the region. It is opening up. It was delayed with COVID, but now it's opening up. I see it myself anecdotally. Lots of foreigners here in Singapore now. So Southeast Asia, I think, is a bright spot in the emerging markets.